You are looking at a daily chart of the Nasdaq. Today is Monday, August 5th. As you can see on the Nasdaq, it has been quite the correction here. Want to point out a couple of things here on the Nasdaq during this correction. The volume hasn't been overwhelmingly, like capitulation type volume, but it's been above average selling volume. But the correction here has been from 18,671 on July 11th to this morning, where it gapped down to 15,708. So a 16% correction, peak to trough. These do not come along very often at all. This is pretty rare, unless you're starting a new bear market, which I don't think we are. But, anything can happen, right? It just pulled back to its 200 today. Found support. People were saying, oh, did you buy the balance? You buy the balance? No, I'm not going to go crazy and jump in and buy a bunch of stocks on what you might consider this a balance. I don't consider this a balance at all. It just opened lower and then kind of went flat on the session. There was a little bit of buying, on the way up, but it was pretty much flat. It was a splat. It was a gap lower and just kind of splat sideways all day. So not a real bounce here. The Nasdaq was down 576 points, 3.43%. I just want to point out in the month of August, it's only been 3 sessions, and it's down nearly 8% in 3 sessions, 1,400 points, 7.95%. There you can see it trading down to this technical level. So the Nasdaq looks, well, what you want to see here, whatever has happened in the past, you can't do anything about it. So what we're looking for tomorrow and the next day and going forward, what you want to see here is it to stay above the 200. You want to see it stop going lower. It's been making these lower lows, the whole way down. It's been making these lower lows, gap down Friday, gap down today, right? So you want to see it stop going lower. And if it just goes sideways, that's fine. It doesn't have to really, go right back to 18,000. That'd be nice. But if it just goes sideways here, because a lot of the charts are damaged and they're not going to be repaired in days. You're looking at more like weeks, and in some cases, maybe even months. So I don't expect a real snapback rally like you saw during the COVID days, when we saw this rapid. Well, I think the weekly will show it, right? Yeah, right here where gap down and just V-shaped recovery. I don't think we're going to see a V-shaped recovery. So anyway. Just take it one day at a time. Today, the Nasdaq was down. Like I said, it was down so far 8% this month, 16% since July 11th. So if the Nasdaq is down 16%, you can expect your growth stocks to be down 2 to 3 times that. So yeah, you're seeing some stocks down 30%, 40%, even 50% off their highs. And those are the ones you want to stay away from. You want the stronger stocks, the technically sound ones. And I'm going to get to that in a minute, but the large cap tech stocks were selling off prior to last week. And there was a rotation into the small caps, and that suddenly changed last week here. As you can see, it broke out, went sideways. It was trending along its moving averages. Now, the last 3 sessions, the IWM has pulled back to its 200, and that did not take long at all for the Russell. So this is a risk on move here, and now the risk is off. You can blame it on the, yen carry trade or the weak jobs market, or maybe there's a recession, or hedge funds are blowing up, or the Fed is too slow. A combination of all. It doesn't really matter. You just want to observe the market, observe what's really happening, and look for strength. I'm going to get there in a minute, but don't get too negative, because as Peter Lynch says, these things happen, and they provide opportunities. The S&P 500 is a little stronger than Nasdaq because it's not down to its 200. It closed 3.5% above it. And let me see. Oh, the Dow Jones Industrial Average. This one fell a lot today. Yeah, and sliced its 50, and it's a little bit above its 200, 1.9%. So, yeah, everything just sold off today. So there's really nothing you could do about it. Your system, our system, my system should have had you out of stocks before today. I know a lot of people are saying, well, I'm cash already, or I only have this one stock and it's holding above its moving average, so it's fine. So that's kind of what protects you from, you could sidestep some of this damage here. Apple, I'm going to get to some stocks now. Apple slices 50 today, and really give no hint, right? It just opens lower. And Warren Buffett was selling. He was selling in the second quarter, which is April, May, and June, right? So he disclosed that this weekend. This is April, and this is May, and this is June. So he was selling here, and so he missed out on all this. Okay, I shouldn't say he missed out on it. He sold some stock. Apple is still his largest holding, and if you're selling stock, Apple stock, because Warren Buffett sold it 3 months ago, you should probably think about doing something else, because you're just being a sheep here. Don't do that. You sell because it slices it's 50. Yeah, I get that. But just because Warren Buffett sold, that doesn't mean that you should be selling. Like I said, still his largest holding by a mile. And he just trims them. And that's what we should be doing too. And he bought in 2016, his original purchase. Okay. So this is back in here. So I don't know. Let's just pick a random 2016 date here. October is at $29. Okay. And now it's at 209. So, guy's got a 7-bagger. So he should take some off the table. Doesn't mean he doesn't like it. And this is just no reason to sell. I feel stupid for even talking about it. It's silly. Apple's fine. They just reported a pretty strong quarter last week. And now with this sell-off, I think it's an opportunity. One thing that upset me a little bit today was that the brokerage accounts like Vanguard, Fidelity, Schwab, even E-Trade was glitching, and you couldn't get in the morning. So when Apple sold off down to whatever it went down to this morning, it was below 200. Yeah, it was at 198. You couldn't buy it. I couldn't buy it. I was going to try, but then, it got above 200 rapidly, and then, up to 210, and even above 210, yeah, 213. It's like, darn, we missed out on it. That's what happens with retail guys. They shut you out. So who do you think was buying it down here? You guessed it. The institutions, they locked you out. Same with Microsoft, traded down to what? What was the low today? 355. What was this? I can't see straight. 386. What was it? 385? 386. Yeah, you can't get it. By the time it opened up, it was about 10 o'clock by the time I was able to access, and Microsoft was already at 396. So yeah, that's really a dirty thing that they did. The brokerage houses today. I'm not saying it's controversial or anything sinister. It's just they weren't working, and retail folks didn't have access. Microsoft slices 200 today. Google got some bad news from the Department of Justice as far as antitrust. They're going to survive. Once again, though, same deal with Fidelity and Vanguard down. We couldn't buy this thing when it traded down below 160, and then it ramped up real quickly here. What, a half hour in, and it's back up to 162. So that's just the way it goes. That's what they call hard cheese, buddy. Too bad you're not on that side of the trade. Yeah, 10 o'clock, it's 472 and is down at 450. So only a 22%, $22 move for Meta from the opening to the first half hour. So you got locked down. It just went sideways after that. So a very peculiar day, very strange day, kind of a disappointing day. This is Tesla sliced its 50 today, and this is why I sell my stock when it slices 50, and this would get you out of Tesla if you were holding it and it traded down to the 50 on Friday. I could see, yeah, it's going to bounce here on Monday. Oops, no, it didn't, and now it met resistance at the 200. So same deal with Tesla, where it sold off in the morning, and in the first half hour, it ramped back up. Went down from what, 182 to 200. Yeah, okay, 201. Yeah, we just missed out on that move. Oh, darn, too bad. The institutions got a piece of it, and I certainly did, and I couldn't. I was logging in, trying to get in, and it just wouldn't let me. So this is the one that I wanted to buy. It was NVIDIA. Even though it's below its 200, I thought it was good for a trade. Ridiculous move lower on, allegedly Blackwell's going to be delayed. It was down at what, $90? Did you get it $90? I didn't. A half hour later, it's above 100. It's above 102. So yeah, that's just the way it goes. I'm not going to say anything beyond that. Retail, got retail got the short straw today, that's all. Anyway, I mentioned Blackwell was delayed and NVIDIA was down. AMD was the beneficiary of this because the thinking is, well, if NVIDIA is going to be late, then maybe AMD picks up some market share or some clients or customers, because they said that their AI chip was selling gangbusters last week at their conference call. So anyway, AMD, you know, below the 200, pretty tough to buy this year. But like I say, it's just forming a base. I believe it'll eventually be something like, you know, a double bottom, you know, base here. And it's just going to take time. This is going to take a lot of time. This is one of those broken damage charts. It's just going to take time. You don't have to jump into this one right away. Heck, you don't have to jump into anything right away right now. Another one that I wanted to point out was CAMT. This is one that I watch. Real strong stock. You can see this is a, you know, swing trader dream, just breaking out and riding the moving averages. And this is the type of trade that I like, you know, not a lot of volatility, just calmly climbing, little pullbacks to moving averages. And this is what I don't like. Not only that it's going down, it's just so volatile. And you know, the daily average ranges here are, look at how much wider they are. If I can get the track price on here, I can give you like a dollar amount. So when it's climbing, you know, it's going up with $4 a day. The high is 100, low 96, 102.99. You know, so it's very consistent. There's a, you know, $2.50 a day. So it's tight trading, little pullbacks, and then over here on the downside, you get these wild swings. You know, this is a $9 swing here, 115 to 104, $11 swing, and this is another $10 swing. So the way down, $12. The average true range is much greater than the $3 or $4 on the way up. And that's what I like. Non-volatile, tight trading, just climbing gradually, pulling back to moving averages. And now for me, this is like untradeable. It's just too wild. Yeah, pull back to its 200 a day and it bounced. I guess you could call that a bounce. Let's take a look at the 5 minutes. There's your, yeah, too bad. $78, and a half hour later it's $86. So yeah, little shenanigans going on there. But you can see the difference in the type of trading. The tight action, climbing hard with just pullback to moving averages being supported. That's sort of trend trader like myself likes. And I don't like the wild action. That's kind of like my enemy, the volatility. And you know, the volatility has been spiking recently, so makes it tougher for you know, to trade. I think some people like the volatility because they, you know, they can buy low, sell high, and just get in and out real quick day trading. This is a CLS, one that had been, you know, kind of doing what I talked about, you know, pulling back to moving averages, finding support and trading higher, kind of tight. Now this one's getting wild. Pulled back to its 200 today and had a bullish engulfing candle. So you know, that's a real positive sign. It's got a gap to fill there above that $50 level. I'll get you the exact price here in a minute, or just a tick below it. 49.63 there. You see that gap? I would bet that it would fill that one there. We'll have to wait and see. Anyway, that's CLS. All right, so I'm just going to get to the positive stuff. You guys seen all the damage in the stocks, and I could go through a bunch of different sectors like retail and drugs and financials and you know, technology. A lot of stuff was down. Crypto, you know, Bitcoin really took a hit, but I'm just going to kind of go to the positive stuff. And when you have recessionary fears, you know, we've heard about this recession for, I don't know, about 3 or 4 years now. And you know, in the inverted yield curve and all that. So what people do is investors do is they buy food stocks and beverage stocks and defensive names like, you know, Colgate and Procter and Gamble and General Mills, you know, stuff that are staples, value staple stocks. And this is Tyson Foods. They reported today, and you can see this tight trading in the breakout here. Obviously, the market weakness, you know, didn't allow it to really bust out. I have to look at this on the daily chart, but they had a beat and raise quarter. And for the market being in the tank like it was, this is showing relative strength. It's got that buy point there at 62.04. So it's something I'm going to watch. There's a few stocks on my list this weekend, and a lot of them were in the food and cigarette and the beverage space. And that's just defensive, and that's kind of like the recessionary fears. This is DoorDash, had earnings last week, and today had a bullish engulfing candle, pull back to moving averages, found support, closed near the high of the daily range. That's a nice hammer candle. This is, a food stock as well, kind of the, contemporary type of food where people order and have it delivered. So Dash looks good. And then of course, Kellanova, this is the spin-off, this Kellogg's, this is the snack company that Mars, the Snickers company is in talks to acquire. I don't know if they're going to acquire or not, but you can see a 16% move. So somebody thinks that Kellanova is going to be brought out. Like I said, it's a spinoff from Kellogg's, and we'll just have to wait and see. But that's obviously a relative strength when the Nasdaq is down, 8% this month. This one is just ripping higher. So just pointing out some strength. I'm not into the negative stuff. I'm not going to go there. I only go to the drug space though, because I do like AstraZeneca. Drugs are usually doing pretty well because people are going to buy their meds, even in a downturn, in a weaker economic situation, which I'm not convinced we are in. Yeah, slowing, yes, but this one just pulled back to its 50 today. Not bad. Down 3%. Not too bad. Down 3%, considering how the index was. But you can see the gap lower. Some buyers came in, just kind of flattened out on the 5-minute chart. To me, this still looks good. This still looks actionable. This is a slower moving name. This is not NVIDIA. This is not going to just rip higher. But you can see this consolidation here, moved higher. Now another little consolidation. So to me, AstraZeneca looks good. SAVA, one of their board members has passed away. I forget, the Sandy Robertson, and may he rest in peace. But the stock went up on, that's the only news I could find for this thing. I'm sure there's something else going on here, but you could see how this one is ripping SAVA. And I have to look further into that. And, obviously it's way extended to be buying up here, especially in this tape, 58% above its 10 EMA. So just pointing out the strength there. And I do want to point out Lilly and Novo. They're reporting this week. And this is what I mean by, I'm selling when your stock slices to 50. This is Lilly. It sliced it pretty convincingly and closed 5% below the 50. So if you sold it that day, just say you sold it at the close at 821, you're still like $50 to the good. And you can always buy it back if this thing reverses this week on earnings, which is Thursday, and you can always buy it back. And if you have to pay more than the 821, which is sold on, and it rips through the 50, fine, you consider it like insurance. But this is how you sidestep these big, trapdoor moves to the downside, as you follow your rules. If you're got a 5% loss, you sell. If it's below the 50, you're selling. So it gets you out and avoids these moves and trips down to the 200. Novo Nordisk, pretty much the same thing. It sliced its 50 on this day, 1.9% below. I think I held it for a little bit below, but once it got like 6% below, I sold. So if you sold on that day, 129, we'll call it 130. And now it closed today at 126. Once again, this is a slower mover. They're going to report on the 7th, which is Wednesday. And if it rallies back through, I'm going to buy this stock back because it's got the growth numbers. They're selling everything they can make, both Lilly and Novo, in the weight loss category. So I think they're going to report strong numbers. I don't know how the stock is going to respond. I'm just going to wait and see. So if you sell when it slices to 50, it avoids this pain. You sidestep the carnage, and it gives you the option to get back in if it decides to rip higher. So now you have options instead of just holding it and hoping, because we don't know how low it's going to go. We don't know how long this is going to last. Okay, so that's why the system is working in getting us out and providing a safety net here while there's total carnage. ELF, they report this week too. Had to point out the strength in this stock today. It was up nearly 6%. And what I noticed about ELF is that, it had this low 153 and then retested it here 150. This is back in what, May or June. And then now it's come back down and retested that today at 152 and found support. Yeah, it was below the 200, but it ripped right through it. It ripped through the 10. And I just trading this stock for a long, long time. wouldn't surprise me if this thing just bounced to new highs after its earnings. It also wouldn't surprise me if it just topped out and, traded back down below all of its moving averages. So you just got to be flexible. You got to have an open mind. If you're holding this stock into earnings, you got a tiger by the tail here. You really don't have any idea which way it's going to go. The trend is lower, as you can see. The faster moving averages are trending lower, but it did find support at the slower moving average, the longer term moving averages. So this is an enigma, this stock, and it's a fun one to trade if you're a trader. But man, it's pretty wild, and my age, I just kind of avoid this volatility. It's too volatile for me right now. I pointed out before how tight it traded before, and now it's just wide and loose. So that's a big concern for me on ELF. But it did have a good day today, so I wanted to point that out. Just trying to pick out some strength here. This is MELI. Mercado Libre, MELI, a Brazilian internet retailer, tried to move higher today, but then just pulled back with market weakness. I believe it was 18.20 and closed at $45 lower. So that's not good. But it did show strength in a weak tape. It was flat on this session. Abercrombie and Fitch, another one that I like, but once again, sliced its 50 right there on 157. Now it's at 134. It did trade down to its 200, found support and bounced. Had a little, bullish engulfing candle here. That looks good to me. I mean, it doesn't look good. It looks horrible. I mean, this is what I'm talking about. These charts have so much damage. I think it's going to take weeks and not days to just rally back through. It looks good that it found support, is my point. Not that it looks good that it's way below its 50. It's 20% below its 50. That's not what looks good. What looks good is that it came down, it sold off, and it found support. And you can see the big volume bars are pretty much blue bars here on the daily. I haven't checked the weekly, but yeah, you got some big selling in here, but I don't know. Abercrombie and Fitch found support at you take it one day at a time. Today it found support at the 200, made a bullish engulfing candle. We'll check back tomorrow or later this week on Abercrombie. Some of the software names I was going to put on, but I took them off. I still like Spotify here. Pulled back to its 50, found support, trying to rally back through here. I still like that 331 buy point. I'm going to put that back on my ready list. GoDaddy has been a strong stock. I don't know what it did today. Okay. With the Nasdaq down 4%, it was down nearly 3%, but the Nasdaq's down 16%. I said this thing's just holding its gains. So GoDaddy is a strong stock, showing relative strength, evidenced by this RS line here, which is pointing due north. And the last one in the software group, software it's hit hard. It's been hit hard, as pretty much everything else has. CrowdStrike, this one, and once again, had people saying, "Oh, 200 is the bottom." Well, maybe, probably just some short covering here, though. If you started shorting here around 360 or 350, and now it's 220, I mean, yeah, it's time to take some profits. So I don't think this one's out of the woods yet, just because it bounced today. I just wanted to point that out, that it did hit 200 and bounce. So keeping an eye on CrowdStrike. Another area of strength is the medical hospital group. This is Transmedics medical products stock, and it just pulled back to its 50 today, found support, and it closed 3.2% above the 50. So kind of a volatile stock. It was down to 137 this morning and closed at 150. So man, yeah, that's and a lot of folks were locked out. They're really upset. They couldn't get in and take advantage of that move today. So anyway, THC, this one is up 2% today. It's another one that I was going to put on my ready list, but I just kind of backing off because I don't want to get too crazy. But it's got that 142.35 buy point. And I'll probably put this back on tomorrow because it pulled back to its 50, found support, and closed it to 85% of its daily range. And it's still near a buy point. I still think it's actionable. I mean, if you're all cash and want to take a swing at something, Spotify or Tenet, you could just put on a small position and just get some feedback. If you get stopped out, well, the market's telling you it's not ready. If it starts trading higher, well, then you're in business. Maybe you got a good entry point on a longer term position. So don't be afraid to, dip your toe in some of these names. CDNA, this one pulled back to its 10 today, bounced sharply 3.5%. It gapped higher last week on earnings. And, I mentioned this last week that it's going to, fill that gap eventually. It's going to pull back to a moving average. And you could see the high on July 31st, which was what, Wednesday, $20.34, and the low today, $20.34 to the penny. It fills this gap, rips higher up to man, it made it up to $25 today. Wow. And then closed at 23.69. So definitely a strong stock and one to watch, in my opinion. Here, there's the move, the move lower in the first bar there. It went down to what, 2034, and not too much longer, it was $25. So gosh, that's 25% move on the day, and we weren't able to sign in and get it. You can tell that bugs me a little bit, right? This is Lantheus. Their earnings report was okay last week, but it sold off. It had this big move on news, good news, but pulled back to its 50, found support. Had that hammer candle today, so that looks good to me as well because it's finding support. You want to see where the stocks are finding support. Anyway, that's it for me. I'm not going to share, like I said, all these negative stuff. Don't buy into the negative stuff. We're going to get through this. This too shall pass. And in honor of the great Steve Jobs, who was a visionary, I have one more thing. I want to look at some earnings, stocks reporting earnings tonight. This is Palantir. They just blew the roof off it today, up 15% after hours. This is going to be up tomorrow. I don't know if it's a big enough stock or a powerful enough stock at 54 billion market cap to drive the software group, but it's not going to hurt. And they did have a very strong report. And this is an AI component. So those AI stocks might be buoyed tomorrow by this Palantir report. It was really strong. The CEO was very effusive in his praise of AI and their strengths and their ability and their products. So looks pretty good for Palantir. HIMS reported tonight. I'm going to have some of this stuff in the morning. Tomorrow, like I said, I have a new format now. I'm just going to have a afternoon video, and then in the morning I'll have all the data, gather all the reports, and have the stocks on my ready list for the day and the week to buy and trade. So HIMS report after hours down 10%. So I guess market didn't like that one. Lucid, they're struggling, I think. It's up 14% after hours. You can see it's a $3 stock now. And if you take a look at the monthly, man, this thing was what, $50 stock. So yeah, look at that. Okay, so it needs a 15% move tomorrow. I didn't look at the report. Like I said, I'll have them tomorrow. CAR, this is Avis, and it's down 3.4%, which in a slowing economy, people not taking as many trips, or fall's coming, kids back in school. They're already back in school here where I live, and so not as many vacations being planned. And then TDC, I believe these guys reported tonight. Teradata down 2%. I'll have this in the morning. Anyway, thank you for watching. Keep your head up. This too shall pass. There's going to be lots of opportunities. I think, Apple is one that, people selling it off, 5%, really on no news. I mean, Buffett sold a long time ago. Man, yeah, just traded it closed 1.7% below the 50. So I'm looking for it to rally back through there, later this week. But 210, and it was what, 237 not too long ago. And what was it, 220, 225 last week? And now it's down $15, really on no news. Buffett selling is not news. Anyway, thank you for watching at mcstockcharts.com. We never give up. Check tomorrow's report for some new stocks on the ready list. Thank you for watching.